You are tuned in to the 5-Minute Signal, Business and Wealth. I am Vivian Thorne, economic strategist. This is not a finance podcast. This is a blueprint for building and defending your economic fortress. We don't do speculation here. We do strategy. 5 minutes on the clock. Let's get to work. Yesterday, Tuesday, February 17th, the market closed with a mask of tranquility that hid a slaughter in the trenches. The S&P 500 closed up a marginal 0.1% at 6,843.22. The Dow added a negligible 32 points to finish at 49,533, while the Nasdaq managed a 0.14% gain. If you only look at those green arrows, you are blind to the reality of the rotation. Beneath the surface, the S&P 500 was a chaos engine, swinging between 0.5% gains and 1% losses. We saw a brutal 7% collapse in General Mills as they slashed their 2026 outlook, citing a consumer that is finally, irrevocably tapped out. Simultaneously, the SaaSpocalypse continued, with software names like Snowflake getting shredded as the market demands actual utility from AI, not just expensive promises. The indices are being propped up by a few legacy giants like Apple and GE Aerospace, but the internal breadth is decaying. This polarization matters because we have entered the great decoupling. The relationship between index price and economic reality has fractured. When the S&P 500 sits at record levels, while consumer staples are being decimated, it signals that capital is no longer seeking growth, it is seeking a bunker. High-level analysis reveals that the smart money is fleeing the overcrowded Mag 7 trade and rotating into the hard hat sectors, energy, industrials, and utilities. This isn't a simple dip, it's a fundamental re-rating of risk. The era of the all-weather tech portfolio is over. If your wealth is built on the assumption that software multiples will expand forever, you are standing on a fault line. The market is now rewarding cash flow certainty over projected growth, and it is doing so with surgical, often violent, precision. The hard truth is that the 50,000 level on the Dow is the ultimate distraction. It is a psychological target designed to keep retail investors in the game while institutional capital exits through the back door. The unvarnished reality is that the American consumer is signaling a hard landing, regardless of what the labor data says. When a staple like General Mills loses 7% of its value in a single session because of demand volatility, the economic strategist doesn't look at the stock, they look at the fortress. Convention says to buy the dip in tech, but the reality is that many of these growth names are zombies waiting for a liquidity event to expose their lack of profitability. Hope is a losing trade. Chasing record highs while the underlying foundations are rotting is not investing, it's negligence. To defend your fortress and find the alpha today, Wednesday, February 18th, you must execute 3 tactical moves. First, run a cash flow audit. Ditch any position that relies on future funding or aggressive debt refinancing. Focus on the free cash flow to enterprise value ratio. Specifically, look at mid-cap energy producers where this ratio is currently at a 5-year peak. Second, capitalize on staple fear. The sell-off in consumer staples is emotional. Identify high-quality defensive names with inelastic demand that would drag down in yesterday's panic. These are your value plays. Third, hedge against the 10-year Treasury. With yields stubbornly holding above 4%, Move into short-duration multi-sector bonds. This provides the liquidity you'll need when the current polarization snaps into a full-scale market correction. The market doesn't reward those who stare at the record-high ceiling. It rewards those who are already positioned on the newly built floor. I'm Vivian Thorne. This has been the 5-Minute Signal. Stay sharp. This program is for informational and educational purposes only. Economic strategist Vivian Thorne is not a licensed financial advisor. This content is not a substitute for professional financial, investment, or legal advice. Always consult with a qualified professional before making any financial decisions.